want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that one or two people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have two guys who are ahead of that and one knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired a successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette
I'm a writer for Bloomberg News for the global business team.
and Kim Basine
And I'm the U.S. luxury reporter at Bloomberg.
to find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW.
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
with violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Paramount or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open-water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to these islands, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean.
Space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. This is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your green in brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, an equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call it biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a down Friday. The Dow, the S&P, both on the minus side. NASDAQ fluctuating between gains and losses. Right now, NASDAQ is higher, barely up by less than half a point. Equities are mixed as investors assess the latest read on the economy after more strategists weighed in with cautious comments about the market. The S&P is down 2 points now, down less than 0.1%. The Dow down 52, a drop there of 0.2%. Again, NASDAQ will call that unchanged on the day. 10-year down 12/30 seconds. 10-year yield 1.33%. Spot gold down 0.3%. 17.89 the ounce, while West Texas Intermediate crude is advancing now by 2.3%. 69.69 for a barrel of WTI. As for the market backdrop, Sarah Malik is Chief Investment Officer at Nuveen Global.
The U.S. does have 4 key risks going into this month. First is the Delta variant. We're happy to see the 6-step plan out of the Biden administration to try to move vaccines along there. And the mixed economic data. Not only have we had payroll misses, but consumer confidence is declining. Also, we're absorbing Fed tapering, and we expect a lot of drama out of D.C. this month. So it will be a volatile September, but after that, we're focusing on 2022.
Apple has been ordered to make a major change to the way it generates money from its App Store in a ruling that chips away at the iPhone maker's grip on the $100 billion market for mobile games. A federal judge said today that Apple must let developers of mobile applications steer consumers to outside payment methods, granting an injunction sought by Epic Games in a year-long battle. Apple shares down now by 2.6%. Again, recapping, NASDAQ higher by 4, up less than 0.1%. S&P is down 1 point, down less than 0.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers Studio in New York. Good afternoon to our audience on radio and YouTube. It's Bloomberg Business Week on this Friday, September 10th, 2021. I'm Tim Stenovic. Carol Masser is off today. Joining me is Bloomberg News cross-asset reporter, also my co-host of Quick Take Stock, Katie Greifeld. Katie, stock struggling to find direction. S&P 500 off its session lows, but unchanged is kind of the word of the day.
Yeah, it definitely feels very unch out there. Interesting to see the broad benchmarks kind of flat, even though with that big Apple news, definitely causing some single stock stories.
We'll dive into that in just a couple minutes. The virus, though, still front and center when it comes to the economic recovery, a point the president made in his broad vaccine mandate. We're going to get an update from an NYU doctor. Also, Katie, you mentioned the big blow to Apple and its lucrative App Store. We're going to check in with our Apple expert, Mark Gurman, in just a few minutes. We'll also talk the Fed president selling their individual stock holdings after getting pushback. Also, the impact of the infrastructure deal on crypto and the crypto industry. And it is a somber day as we mark the 20th anniversary of the September 11th attacks. We've got a great story out today at Bloomberg.com. It profiles some of the children of those we lost in the attacks and how they've actually followed their parents into finance. Also, the president and CEO of the 9/11 Memorial Museum joining us as well. Well, let's get to the Market Drivers Report. With me now in the Bloomberg Interactive Brokers Studio in New York is Dave Wilson, stocks editor at Bloomberg News. Also joining us, Vince Signorella, global macro strategist with Bloomberg News. He's on the phone from White Plains, New York. Dave, Katie said it, unchanged. Stocks flat. The NASDAQ is actually flat right now. What's driving stocks today?
Yeah, pretty much an even split when you go through the 11 main industry groups in the S&P 500. Tech stocks really aren't helping, even though you're seeing some gains among the chip makers. And a big piece of that is Apple, but also it's Alphabet, the owner of Google. You got to figure that if Apple can't win in court when it comes to payments for apps, you have to figure the Google store is going to be in the same boat, at least at some point down the line. So, Alphabet with those two classes of shares in the S&P 500, both down about 1.5%, while Apple's lower by 2.6%. In terms of weakness, though, you go right to Kroger, down 7.8%, steepest drop in the S&P 500. Not as profitable in their latest fiscal quarter as analysts expected. Didn't spend as much money on stock buybacks as they did the previous quarter. And bear in mind, this is a stock that has really run up this year. At one point, it was up 51%, and Warren Buffett's Berkshire Hathaway has been buying right along, building its stake quarter by quarter. So there are a few moving parts to at least explain that particular decline.
Still, though, it relatively good quarter for the company. It's just expectations were really high.
Yeah, and like I say, you have a stock that, Warren Buffett and his colleagues have been buying, and so clearly that would have some effect on the price, you would think. So, put it all together and people finding the weak spots. Of course, that's been a theme, for months now as, companies have reported results, if only because so many of them have beaten analyst projections.
And Vince, speaking of weak spots, you track markets around the clock, and you wrote on the Markets Live blog this morning that there's been a really interesting pattern where you get maybe a big move up in equity futures heading into the U.S. trading session, but then the stocks tend to drop at the cash open 4 out of 5 days this week. Is there any signal there? Why are we seeing that dynamic play out?
Well, traders are pointing this out to me this morning, actually, and they're basically saying that we always have had the buy the dip sort of mentality, but it feels, at least in the New York market, traders in New York are starting to see this as a sell the rally kind of thing. They feel a pullback is more likely. More and more analysts are calling this a top. And at the same time, the Fed keeps banging the drum for tapering. So, the feeling on the street when I talk to traders is that if the tapering talk really, really continues and may become sooner than people are prepared for, given that we've had disappointing numbers, people have sort of backed off that a little bit. The faster the tapering comes, the faster the hikes are going to come, and that takes away the punch bowl. And let's face it, since 2008, this bullish market has really been riding the coattails of Federal Reserve easy monetary policy, and the thought process is when that goes away, so do the gains. Now, how far a pullback that will be, no one's really got a good feel for that, but they do expect something.
And Vince, it's interesting to hear you say that, those traders expressing those concerns. I'm wondering, is that this consensus that you're seeing out there? Because, this is coming on a week where we've just gotten a chorus of banks downgrading their views on U.S. equities for a lot of the same reasons that you just cited.
Yeah, and I think it's part of that. I think, when you have like the likes of Goldman, Citi, Morgan Stanley, Deutsche, all and others all basically saying this is the top of the market, the traders take notice, and traders at those banks take notice, and there's probably investors. What we're seeing is investors taking something off the table. They're trying to get out in front of this, pare back some of their holdings. Nobody's like really saying something like get out of the stock market completely and get into cash. I think
unless you're a Fed official.
That's right? Really embarrassing, I have to tell you. That is very embarrassing. But I think they're looking to get away from that like super aggressive percentage sort of basis, maybe down to a 50-50 kind of thing.
Right.
And just maybe wait to buy the dip, and maybe that dip is going to come a lot steeper than people had initially expected.
Oh, well, 5 days of decline in the S&P 500 if it closes in the red today. Vince Signorella, global macro strategist at Bloomberg News. He joins us on the phone from White Plains, New York. And in the studio, Dave Wilson, stocks editor for Bloomberg News. He's with us in the Bloomberg Interactive Broker studio. Dave's going to be back with us in a little under 90 minutes with his song of the day, his stock of the day. And
your song of the day, Tim.
Oh, yes, it's my song of the day. I'm very excited about it, Dave.
You're
going to like it. You're going to like it. Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot, brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number is 300,000. Facebook wants to gobble up more office space in Manhattan, even as it delays its return to office plans. The company has explored taking roughly 300,000 square feet of additional office space at its 770 Broadway, a building near Astor Place where it currently has offices. The Menlo Park, California-based company already has a large presence here in New York, and last year signed a massive lease at the redeveloped Farley building, a former post office across from Penn Station. Let's head now from Penn Station to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Hey, Tim. 9/11 remembrances have begun with FBI Director Christopher Wray delivering remarks today at the Terrorist Screening Center outside of Washington, D.C.
Because of September 11th, the FBI transformed itself in ways that have made us better able to carry out our mission to protect the American people and uphold the Constitution.
Wray says the FBI has never stopped working to keep Americans safe. Tomorrow, President Biden and First Lady Jill Biden will visit all three sites that came under attack September 11, 2001. Former Presidents George W. Bush and Barack Obama will also attend commemoration ceremonies. Officials with the Biden administration are meeting this afternoon to discuss a possible probe into Chinese subsidies and their damage to the U.S. economy. Could be a way to pressure Beijing on trade. Today's meeting follows a 90-minute phone call last night between President Biden and Chinese President Xi Jinping. The White House says they discussed issues where their interests converge, as well as areas where they do not see eye to eye. Bloomberg Government's Emily Wilkins with more.
Senior administration officials have told reporters that Biden initiated the call because meetings with his cabinet officials and Chinese counterparts over the last couple months really haven't been very productive.
Emily Wilkins reports Biden and Xi will have a chance to meet face-to-face at the UN's Climate Summit in Glasgow this November. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 20 3,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenovec and Katie Greifeld on this Friday in the Bloomberg Interactive Brokers studio in New York. Katie, we got a lot of virus headlines to get to, but let's talk a little bit about airlines and airline passengers when it comes to, well, having to wear a mask. The president has an answer for the growing numbers of unruly airline passengers who won't don masks while in flight. They're going to be fined twice as much.
Yeah, we are talking some big numbers here. There was a post on the Transportation Security Administration website that read that the new range of penalties will be $500 to $1,000 for first offenders, could be as much as $1,000 to $3,000 for second offenders. So it seems like they're really taking this seriously.
You know, I've only flown once during the pandemic, and people were really good on the flights that I took. I had 4 flights. They were really good about wearing masks on the planes.
Well, there are some people who are really bad because Biden today, he actually, or maybe it wasn't today, no, Thursday evening, he singled out the rise in reported episodes involving unruly passengers who have been captured protesting mask requirements in videos that often go viral. Tim, I have watched a few of them myself. It's really amazing how passionate people are on both sides of this.
Yeah, sometimes, though, you watch those videos and you wonder, okay, well, how much of these people had to drink, which actually is a huge issue on planes. And that's why we've seen some companies cutting back on alcohol service as well. The president said, quote, "Show some respect. The anger you see on television toward flight attendants and others doing their job is wrong. It's ugly." The president right now in the entire Biden administration is trying to get the United States past this current flux that we are seeing, this current impact of the Delta variant as it continues to make its way across the United States. There are questions as to whether or not it has peaked in certain parts of the South and whether or not parts that haven't been hit as hard by the Delta variant, like where we are in the Northeast, are still waiting to get hit by the Delta variant as kids go back to school and the weather gets colder and we start to spend more and more time indoors. But it also has a significant economic impact to something that the president talked about yesterday with the idea that people don't go to dinner as much. They don't fly as much if the virus is spreading. This is Bloomberg.
Thank you.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Equities now lower across the board. The Dow, the S&P, NASDAQ all on the minus side, but the NASDAQ 100 index is holding on to a gain barely, up by 0.03%. Investors are assessing the latest read on the economy after more strategists weighed in with cautious comments on the market. The S&P is down 5, a drop of 0.1%. Dow Industrials down 59 now, a drop also of 0.1%. The NASDAQ Composite Index down 7, a drop of just about 0.1%. 10-year's down 12.30 seconds, 10-year yield 1.33%. Spot gold down 0.3%, 17.89 the ounce, while West Texas Intermediate crude is up 2.3%, 69.74 a barrel on WTI. Apple shares weighing on markets down 2.7%. Apple has been ordered to make a major change to the way it generates money from its App Store in a ruling that chips away at the iPhone maker's grip on the $100 billion market for mobile games. Again, Apple down by 2.7%. Recapping 10-year 1.33%, S&P down 5, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Katie and I mentioned some of the virus headlines, but we do like to do an update about where things stand with numbers. Cases passed in the globe, 223 million. Deaths have exceeded 4.6 million. More than 5.63 billion doses of the vaccine have been administered. Let's check in now, as we do each and every week, with Dr. Ian Lustbader, clinical professor of medicine at NYU Langone's Medical Center. He joins us on the phone from New York City. Dr. Lustbader, how are you on this Friday afternoon?
Great, Tim and Katie. Happy Friday. Lots of COVID news every day, it seems.
Yeah, and look, I think it's fair to say we're going to continue to be doing this Friday check-in with you and focusing on COVID for quite a while, because it does seem like we continue to get relentless news about the spread of the Delta variant. And I do wonder to what extent you think that the president's vaccine mandate that he announced yesterday for companies with more than 100 employees have to get vaccinated or face weekly tests. To what extent do you think that will put an end to the spread of the virus?
You know, I think there are a few challenges with the vaccine mandate. On the good side, or the good news, is that at least 75% of Americans have had at least one vaccine. Over 50% have had 2 vaccines. We also know that vaccines really have been very helpful in reducing severe disease, and masks are certainly helpful as well. So we definitely are making some progress. The challenge really is how to get everyone on board, and I think that's going to be very difficult. I'm not sure the vaccine mandate is going to be that helpful for several reasons. One is, by the time this is sort of set up in a regulatory fashion and potentially enforced, it's going to be a number of months down the line, and probably this Delta wave that we're seeing will likely be over sometime in the next few months. So you're sort of risking political capital and maybe polarization for really an unclear benefit. And I think a number of people may feel that having businesses incentivized for the health of their own employees may be the best thing. Local districts and businesses really decide. I think the idea of vaccination is very helpful. The challenge is, will you alienate people? There are some studies that suggest of the about 25 to 30% of unvaccinated population, about 35% of them say the reason they're not doing it is they don't trust the government. The other percent is concerned about side effects. So I think we need credibility. I think we need to reassure people to some degree about side effects and reassure people that there are no ulterior motives to slowly kind of chip away at that population that's been somewhat resistant. I'm not sure mandates are going to be, how effective it's going to be, and how long it'll take to really get that in place.
And so that's an interesting point about the holdouts that are still unvaccinated, that, in your view, reassurance would work better. But I'm curious, let's talk about carrots and sticks, because this vaccine mandate, clearly it's a stick. And Tim and I were just talking about airlines imposing fines on maskless passengers. I'm curious how, in your view, are we going to see more things like this, like penalties and fines when it comes to getting people to mask up or get vaxxed versus, the administration or companies actually taking a more reassuring route?
I think scientific data is always helpful, and believe it or not, we don't have randomized control trials. We've been battling this for 2 years or more, and we don't really have randomized control trials about masks. And so when we talk about kids or, the benefits of masks in schools and so forth, we, over the past 2 years, could have done really big studies and made some determinations. So I think we're relying on data from a number of other countries, and many of them don't even require masks. But I think individual businesses can do set guidelines for what they want. And an airline, if they publish this is, our requirements, you have to show your vaccine card or wear a mask during the flight, I think it's really within their right to do it. I think it would be more helpful if we had these studies already up so we can show people how effective it is, but it's certainly within their right to do it. And I think for short flights, for a couple of hours, it's very reasonable to do. When you're talking about people on 5 or 6 hour flights to remain masked or kids, that's going to be tough to enforce in the middle of a 6 hour flight.
What about when it comes to the role that school boards and school districts take? Because we learned yesterday that Los Angeles is saying that all students 12 and older must be fully vaccinated by January 10th. Students need a lot of vaccines already. There are vaccine requirements at different ages for different schooling. I'm wondering what you make of this one, Dr. Lustbader.
Completely right, Tim. We even mandate, which I disagree with, hepatitis B vaccines before, kids really start school. That's to reduce the incidence of a potentially sexually transmitted disease. And, it can be 12 years before a kid or more before kids are even exposed. So I do think it is reasonable to require vaccines or a number of vaccines required before school. But I think if we had safety data, more safety data and more efficacy data, people would be a lot happier to be on board with that. And I think we need to accumulate that and really reassure people. It should, over time, really reduce COVID in the schools. But I think parents would want to be reassured about it. Again, I think a lot of COVID is going to be over before all this gets enforced over the next few months.
Dr. Ian Lustbader, we unfortunately have to leave it there. Thank you so much, as you do each and every week, for joining us on this Friday. Dr. Lustbader is clinical professor of medicine at NYU Langone's Medical Center. He joins us on the phone from New York City. In just a few minutes, we're going to talk the latest when it comes to Apple and Epic, the judge handing down the ruling to Apple just hours ago. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. Katie, in just a few minutes, we are going to get the latest from Mark Gurman, technology reporter for Bloomberg News, the guy who breaks all of the big stories when it comes to Apple. Remember, a court ordered earlier today that Apple can no longer force developers to use in-app purchases. Shares of Apple lower on the day today as a result. Shares of Google, the parent company of Alphabet, parent company of Google, also taking a hit today as well. We're going to dive into all that and more in just a few minutes. In the meantime, a check of the trading day with Charlie Pellet.
Thank you very much. Lower across the board right now. Tim, you mentioned Apple. Shares down 2.9%. But what about some of those video game makers? Zynga right now up by 6.8%. We've got Activision Blizzard shares up 3.1%. EA, that's Electronic Arts, it is up now by 2.8%. Bottom line, though, Apple lower, weighing on markets. Apple down now by 2.9%. Investors are also assessing the latest read on the economy after more strategists weighed in with cautious comments about the market. S&P down 9, drop now of 0.2%. The Dow down 84 points now, a decline of 0.2%. NASDAQ down 30, a drop also of 0.2%. 10 years down 12.30 seconds, 10-year yield 1.33%. Spot gold lower as well, down 0.3%, 17.89 the ounce. And West Texas Intermediate crude advancing 2.3%, 69.73 a barrel. Cannot ignore the NASDAQ 100 index, also lower today, down 0.1%. Russell 2000 down by less than 0.1%. President Biden has laid out a sweeping plan to combat the pandemic, including a requirement for all large companies to mandate shots or testing. You heard the pronouncement live here on Bloomberg Radio. As for large public gatherings, sporting events, for example, are we putting ourselves at increased risk? That question today for Dr. Andrew Pekosh, professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
We're really not ready to do those kind of things without something like vaccine mandates, without masking mandates to allow us to get into those situations with greater amounts of protection.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among the vaccine stocks that we track, Pfizer down 0.1%, actually down 0.6%. BioNTech, its German partner, its ADRs up 0.6%. AstraZeneca's ADRs up 0.2%. Moderna, based in Cambridge, up 0.1%. J&J, Johnson & Johnson, down 0.3%. Recapping 10-year yield 1.33%. S&P lower by 9, down 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, it is the big story of the day when it comes to tech companies, and indeed Apple stock taking a hit as a result. A court ordering that Apple can no longer force developers to use in-app purchases. This is the culmination of the Apple Epic Games battle. With us now for the latest is Mark Gurman, technology reporter at Bloomberg News. He joins us on the phone from Los Angeles. Mark, how big of a deal is this for Apple?
This is a multi-billion-dollar per year deal for Apple. This sets up major changes to the App Store where Apple will have to allow all apps, including games, to steer or have the option to steer users to complete transactions outside of the in-app purchase ecosystem, which would save developers 15 to 30% and obviously take that 15 to 30% out of Apple's pocket.
Mark, what does that look like for a user, for somebody who has been making in-app purchases? How much of a burden is going to be put on the user to actually go somewhere else to make this payment? Is it just going to be easier to pay Apple?
So there's a big question that remains. Will Apple require developers to offer both in-app purchase and allow them to also steer at the same time? So are developers going to be allowed to steer users without offering IAP? In the past, Apple has made these concessions while still requiring IAP to give the user choice. I'd imagine there's still going to be some users who are going to use IAP for the convenience, and there's also going to be some developers who are not going to build external payment systems that could cost them a few percentage points and a bunch of convenience as well.
And so, Mark, let's broaden this out here, because you said this is a multi-billion-dollar-a-year deal for Apple. That's a bunch of money, but what does it mean for the other tech giants out there? I mean, is this just the start of a wave of antitrust actions against some of these tech giants, or what are you expecting?
Yeah, I think what we want to say here is that this is probably going to impact Google's ruling, right? There is a Google trial with Epic going, it's going to be happening across the next year into 2022. And it's going to be very important for, the ruling in there to take into account this Apple ruling. I'm not sure this impacts Amazon or Facebook, but definitely look for this to have an impact on the Facebook or the Google situation next year.
One thing that is interesting to see is the way that companies that have made or pushed back against what Apple has been doing for years, Spotify, for example, higher by more than 2%. Netflix, on a day like today where the broader market is lower, is higher today by more than a percentage point. What does it mean for those companies that have long complained about this, what they call a toll on the App Store highway?
This has already been done already, right? Like Apple last week said it would allow Netflix and Spotify and other media apps to bypass this 30% fee. So there's no news here for those developers.
The stock's still moving higher, though.
I don't know why. Clearly, the traders aren't reading our articles, right? This already happened a week ago.
So no difference for these companies. It's just the gaming companies that are affected because Apple exempted gaming.
No, there's no difference. Apple already did this a week ago. There's no difference.
No difference.
The difference is that it's for games.
Okay, that is very helpful context. Hopefully
they're
some of
listening.
the traders on the terminal click. But I am curious, Mark. We know that Apple is going to appeal this decision. Do they have any shot? And I mean, how far could this go?
I don't know. I just spoke to their general counsel, who was non-committal on appealing the decision, so it's unclear yet. They say this is a resounding victory, a giant victory, and they're very happy with the ruling. So it's unclear what they're going to do. They probably knew they were going to have to do this anyways. That's why they did it last week.
Just in the last 45 seconds we have with you, Mark, do you think what does your gut tell you about Apple saying this is a victory?
I mean, I think they're right. They were ruled to not be a monopolist. They were ruled to not have antitrust issues. They simply have to expand a decision they made a week ago to games. They already did it for Spotify and Netflix. So there's not a lot happening here. They're also going to get about, $4 or $5 million with an M from Epic for lost revenue.
It's like a tiny amount of money for the company, Mark.
Yeah, Tim Cook could buy a new car, right? So, just a little bit of money. So yeah, overall, it's a big one for Apple.
Mark Gurman, it's always great to chat everything Apple with you. We really appreciate you taking the time. Mark Gurman, technology reporter for Bloomberg News. He joins us on the phone from Los Angeles. Another check of the stocks that are making big moves as a result of this. Apple shares down right now by 2.84%. Alphabet shares also under pressure as a result of this. Let's now go to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey, Tim. After unveiling new vaccine mandates yesterday for many employees nationwide, including school staff, President Biden and First Lady Jill Biden today visited Brookland Middle School in Washington, D.C. to tour the classrooms and to discuss COVID-19 precautions for students.
We all know if schools follow the science, and they are here, and implement safety measures like vaccinations, testing, masking, then children can be safe in schools, safe from COVID-19.
Biden also says he's keeping a close eye on scientific research on vaccinations for kids under the age of 12. Well, France is now requiring a negative COVID-19 test from unvaccinated travelers from the U.S. That's in addition to a 7-day quarantine after entering France if the traveler has an essential reason for being there. This comes after France moved the U.S. and Israel down to its orange list. We are midway through the 2021 Atlantic hurricane season, and Florida Weather Center Chief Meteorologist Jonathan Porter says that means more storms are on the way.
There's plenty more of the season to go, and we're expecting, unfortunately, more impacts here in the United States.
Porter says forecasters are keeping tabs on a tropical system out in the Gulf of Mexico, south of Texas this weekend. Views on interracial marriages are changing. A new poll indicates the vast majority of Americans approve of them. The survey from Gallup revealed that number sits at 94%. Gallup began asking the question back in 1958 when just 4% said they felt it was okay for people of different races to tie the knot. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York on this Friday afternoon. Katie, this story catching our attention and certainly catching the attention of readers around the world. A couple banks in Paris are using under-desk sensors as their offices return is ramping up. Workers returning to the Paris offices at two of the biggest French banks, they're set to find something new under their desks.
Yeah, and those French banks in particular, it's SocGen and Natixis. And like you said, they're placing sensors under workstations, similar to those that are used in car parks to detect which vehicle spots are actually free. This will let the traders who are returning actually know where they can sit to try to maintain social distancing. It doesn't collect data. I feel like that's important to mention. It doesn't track temporary movement. So if you have to itch your leg, you're free to do so.
It's okay. Well, you know, the aim, as you said, is to allow staff to see on an app which desks are free, which ones are being used, so then they can go sit in places that adhere to socially distant guidelines. I wonder, Katie, you know, this is an experiment, and we've seen the experiment play out more so recently as companies figure out really the right answer, at least for them, to get people back to work, to help their employees feel comfortable, but also to do it in a way that is indeed safe and protects people. And I wonder, you know, we talk about this quote-unquote new normal. What is the new normal as more and more offices fill up around the world? Is this not going to be news anymore?
Yeah, it remains to be seen. I mean, I hope it continues to be news because I was interested to read this article, but specifically French banks, they seem to be really leaning into flexible work arrangements, letting people work from home, try to balance that with their personal lives. So we'll see if more of these sort of innovations come along.
Yeah, I wonder if the flexibility is going to stick. I think actually that is one thing that will stick. I think that, you know, you won't have to go through the same approval process to work from home after spending the last 18 months working from home. I think that's something that we're going to see change on the other side of the pandemic. This is Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a down Friday as investors assess the latest read on the economy after more strategists weigh in with cautious comments on the market. Apple is trading lower after a court ordered the iPhone maker to steer consumers to outside payment methods for mobile apps. Apple down now by 2.7%. S&P is down 8, drop of 0.2%. The Dow down 82, a decline of 0.2%. NASDAQ is down 25, a drop also of 0.2%. 10-year's down 12.30 seconds, 10-year yield 1.33%. Spot gold down 0.2%, $17.90 the ounce. West Texas Intermediate crude up 2.4%, $69.80 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Pulte Group, the paint maker Sherwin-Williams, and also the paint maker PPG Industries all slashing their outlooks this week as a result of higher input costs and inflationary pressures. Brooke Sutherland is Bloomberg Opinion columnist, and she writes about it for Bloomberg Opinion. Also joining us is Bloomberg Business Week editor Joel Weber. He's on the Access line from Brooklyn. Joel, I thought that these issues were transitory. I keep hearing about these higher prices being transitory, and I'm wondering to what extent it's going to continue to be a challenge to these industrial companies.
Depends who you're listening to, I think, because I think the companies themselves, and this goes just beyond industrials too, have been saying that they don't always think it's going to be transitory. But what I thought was significant about this is just how quickly things have begun to change, and Brooke does a great job of outlining this in her story. That what we saw a couple months ago, it's really quickly changed, and we're seeing that. And we'll continue to see that in earnings. So Brooke, walk us through what's changed and how it's manifesting itself in the data.
I mean, I think you really summed it up well, that it's just been so quick. I mean, you have to remember it was just July that we heard from a lot of these companies giving their most recent earnings updates, and things are just moving so quickly, particularly with some of the raw material inflation, but then also with some of these shortages that are just really getting to the point where manufacturers cannot find a way around them. But I thought one striking data point was PPG, which is the paint maker, said that raw material inflation was running $70 million higher in the third quarter than what it anticipated in July. And keep in mind, it was already factoring in a pretty significant headwind from rising costs in July. And so, that really just does underscore that this is moving faster than anticipated and not getting better.
And so, Brooke, transitory or not, I mean, how much pricing power do these industrial companies like PPG, like Sherwin-Williams actually have? I mean, are they able to pass at least some of these costs to their customers, or are they just having to eat this themselves?
No, they do have a good amount of pricing power, and I would say even more so in this current period. You're not really hearing about any pushback to price increases yet, with the key word being yet. But they are being, generally able to push through pretty significant price increases to try to keep up with the rising costs. And I think that's because customers understand what's happening. I mean, all you have to do is look at the headlines and see reports everywhere about, various different kinds of inflation and shortages. And so customers understand, but there is a breaking point to this.
So what is it that's driving the cost increases, Brooke? Is it any one thing more than another? We've heard so much about container shipping prices going up. We've also heard about raw material prices going up. There is, of course, the cost of getting employees off the sidelines and making sure that they're coming into work. And we've talked to CEO after CEO who said that they've had to raise wages as a result of that. What is it that's driving these price increases and these higher input costs?
I think it's everything that you just mentioned. And I think, that's what makes it so difficult, is that it's not just one thing. It's not one product that you can't find right now that you're having to pay up for. It's almost everything. And then, with logistics costs rising, labor costs rising, raw material costs rising, you're really starting to feel the pinch. And one comment I thought was really interesting was we did a video interview with the Union Pacific CEO with a team of Bloomberg reporters and editors, and he was talking about, inflation pressures from janitorial services that clean their office buildings and people who mow their lawns and their employee health care costs. And this is a railroad. That's not its main business, but these are major companies that employ, hundreds, if not thousands of people, and they rely on a lot of these ancillary services. And so there are the big ones that we talk about, raw materials, labor, logistics, but there are also these other sort of backdoor inflationary pressures that these companies have to deal with, even if it's not their primary industry or business.
So do you just not mow the lawn, Brooke? Is that the big takeaway there?
Maybe. I guess save some water, right? I don't know. Maybe you can save a few pennies there. But I think, these companies have been incredibly creative about managing supply chain pressures and coming up with ways to keep costs down. I'm talking about rerouting ships, but also redesigning products. I talked to the Honeywell supply chain chief a few weeks ago, and they've redesigned some of their sensors to get around the semiconductor shortage. But there is only so much of that you can do, especially when things are moving as quickly as they are right now. And I think that's the period that we're getting into, and you might really start to see these supply chain challenges and inflation in raw materials and logistics really start to take a bite out of earnings in the third quarter.
So when you're talking to the CEOs that you talk to and sort of attempting to understand where things are headed, Brooke, I'm really curious. Are they viewing this as like, the new normal, which, was going to be September and now is maybe January, and if that, right? Or are they just recognizing that we're entering a new dynamic and these are really permanent changes, and that the sooner that they come to more permanent solutions, the better?
I do think it's a bit of a moving target. I think people were optimistic, in sort of the earlier part of the summer that some of these headwinds would clear, or at least not be quite as strong as what we're seeing right now in the fall. And that is obviously not the case. GE put out a statement earlier this week talking about pressures that it's facing in its healthcare business from limited availability of workers and parts. And they don't expect, the operating environment to get much easier until, the midpoint of 2022. And so we are talking about a pretty significant timeline here. I will say, a lot of the manufacturing CEOs who've been in this business for a while, they have seen raw material inflation go up and down significantly over the course of their careers. And most of them would tell you some of those price increases are probably not going to be permanent, that there will be some volatility there, tied to weather events, tied to the reopening effect on the economy. But I think what's really sticky in manufacturing is wages. Once you increase wages, it is hard to take those back down. And so, I think that is where they're getting a little bit nervous, I guess, in terms of how this plays out over the long term.
Well, I want to build on that because that's what's fascinating to me, that if we did see companies really have to raise their wages, that's how inflation kind of gets built in. So, how have these companies been approaching that? Have they been offering sort of one-time perks, or are you actually starting to see some of these companies sort of capitulate and actually boost wages?
You are seeing them raise wages. I guess I will say there's a little bit of a divide between, the companies that complain about labor shortages and the companies that are willing to raise wages, where you're not quite, some of the companies that really go out of their way to make their workers feel like they're part of the community, they try to treat them like human beings, they pay them good wages, they're not complaining as much about labor shortages. They're still feeling the pain here, but I do think there is a little bit of that in terms of, what kind of culture do you want to create? Because we also did just come out of the other side of a pandemic here. We have ESG as a big phenomenon, and you have investors getting, increasingly attuned into what do workers want. And so I think that's definitely part of the narrative here.
Brooke Sutherland is Bloomberg Opinion columnist. She covers industrials and more. Also joining us, Bloomberg Business Week editor Joel Weber. He's on the Access line from Brooklyn. A big thank you to both of you for taking the time. Check out Brooke's article available at Bloomberg.com and, of course, on the Bloomberg terminal. It's called The Earnings Crunch is Getting Real. We have much more Bloomberg Business Week coming up in just a few minutes. We're going to talk all about those Fed presidents who have sold their stocks lately. This is Bloomberg Business Week.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a down Friday. Stocks on track for a losing week right now. The S&P is down 9 at 44.83. That is a drop of 0.2%. Investors are assessing the latest read on the economy after more strategists weighed in with cautious comments on the market. S&P right now down 9, as I mentioned, lower by 0.2%. NASDAQ down 31, a drop also of 0.2%. NASDAQ 100 index down 0.1%. Russell 2000 also down 0.1%. The Dow now lower by 94 points. The Dow down 0.3%. Well, as for the overall market backdrop and where stocks could be heading, David Bianco is Chief Investment Strategist at DWS Investment Management.
Our 12-month target, which is September of 2022, is 4,600. The S&P has been very close to that already. And a lot of people are asking us if the S&P can reach 5,000. We think it can, but that's more about 18 months away likely rather than 18 weeks away.
And again, the S&P now at 44.82. The rapid spread of the COVID-19 Delta variant, higher inflation, and persistent supply chain challenges are prompting economists to downgrade U.S. growth prospects for the remainder of the year. Forecasters lowered their economic growth projections for the third quarter to 5% from 6.8% and trimmed their fourth quarter estimate to 5.3% from 5.6% based on median forecasts from Bloomberg's latest monthly survey. Apple was ordered by a court to change the way it operates its lucrative App Store in a sweeping ruling against the iPhone maker. Apple also weighing on markets today, with Apple shares down now by 2.7%. Among game makers, Zynga up by 7.9%, Activision up 2.5%, Electronic Arts up 2.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studios in New York. Bloomberg Business Week is brought to you by Land Rover, introducing the Land Rover Defender, Motor Trend's 2021 SUV of the year. Put the Defender's capabilities to the test at your local Land Rover retailer. Land Rover, above and beyond. Well, we learned late yesterday that the presidents of the Federal Reserve Banks of Boston and Dallas said that they're selling their individual stock holdings. They're going to do that by September 30th. This in moves aimed at quenching ethical concerns over their trading activity last year. And then just earlier today, we have a new article by Steve Matthews on the Bloomberg, and it says that the Fed accountability under fire after stock trading revelations. Let's dig into it with Michael McKee, international economics and policy correspondent at Bloomberg News. He joins us on the phone from New York City. Mike, first of all, just give us an idea of how rare it is to see disclosures like we saw from these two Fed presidents earlier this week. You've been covering the Fed for a long time.
Yeah, it's something that you don't see very often, and part of the reason is that many of the people who are Fed bank governors or bank presidents have worked in finance before, but not to the extent that Rob Kaplan has done. And I think Eric Rosengren from Boston is in the position of probably wouldn't seem so bad if the Kaplan news wasn't out there. But both of them trading actively. It's not against the rules for Fed bank presidents. There are voluntary guidelines to avoid conflicts of interest, and both men said that they thought they had done that, but the optics aren't good.
Yeah, well, let's talk about some of what they were actually holding, because I think that's a big reason why the optics are so bad. If you look at Rosengren's holdings, he had stakes in 4 separate REITs, and this is a man who had warned about overheating risks in the U.S. real estate market. And then Kaplan, the fact that he was trading the iShares floating rate bond ETF. I mean, that's a product that's directly impacted by what the Fed does with short-term rates. I mean, Mike, you live and breathe the Fed. These are annual disclosures. Have you ever seen such specific targeted trading like this?
No, I have not, although there was one previous incident where Steve Friedman was former CEO of Goldman Sachs, was chairman of the board of the New York Fed, and he traded Goldman shares while he was on the board, and that had specifically been prohibited. If you're at the Fed, you can't trade financial shares, but he got a waiver for that, and he was forced to resign as chairman of that group. The interesting thing about the Rosengren and Kaplan trades is that in both cases they were talking against their book. Rosengren wanted to raise interest rates, which might have hurt the REITs, and Kaplan wanted to raise interest rates, which would have sent rates higher and the price lower on his shares in the float. So, I think, again, it's a question of optics more than anybody trying to take advantage of it.
Well, to stick with the optics, there was a quote in a Bloomberg News article last night from Roberto Perli. He's a partner at Cornerstone Macro. He's a former Fed economist, and he told Bloomberg News that doing things like this, although it's not prohibited by the rules, shows poor judgment and really hurts the reputation of the Fed. And he said even though that Rosengren and Kaplan have agreed to basically go to cash or go to diversified index funds, that the damage to the institution is done. And Mike, I'm really curious to hear your take on just the whole situation. I mean, do you agree with Perli that, this is a real reputational hit for the Fed?
Well, I think it's a reputational hit, and I think it's going to resonate with those who are already looking to reform the Fed. Of course, there are a lot of different people and different views on how that should be done, but you have Elizabeth Warren out today saying that the law should be changed so that nobody in the Federal Reserve can trade stocks while they're at the Fed or really trade any assets. I think because there doesn't seem to be an indication of impropriety, just either poor ethics or a poor appearance, that it's not going to have a long-term damaging effect on the public view of the Fed, but it will feed the perceptions that people already have that the Fed can be out of touch. And so in that sense, it isn't helpful.
Does it, Mike, do you think, prompt any rule changes? You did mention the tweet from Senator Elizabeth Warren. She did say that Fed officials shouldn't engage in trades to, quote, enrich themselves. She also mentioned that members of Congress and senior government officials should not be allowed to trade or own stocks. Does anything come of this?
I think we're more likely to see regulations, self-regulation by the Fed than we are members of Congress.
Yes, fair to say.
The Fed will recognize that they have an issue here. And with Kaplan and Rosengren basically getting out of their positions, there won't be an ongoing issue. It'll really come up when there's a new Fed bank president somewhere. And so that may do if they put in some sort of self-regulation that says you have to get rid of your holdings. Now, in the executive branch, when people come to work, and many people come from industry and they have their company's stock, they're given a waiver for a certain amount of time to sell the stock and not to have to pay a gigantic capital gains tax. And that may be something that you would need congressional legislation for with the Fed, but it might be worth doing. When Kaplan came to the Fed, he had held a whole lot of Goldman stock because, of course, he was a vice chairman of Goldman, and he had to sell that all because, as I mentioned, they have a prohibition against financial shares, and he took a big capital gains hit. And obviously, he's going to take a huge capital gains hit selling off his entire portfolio, and Rosengren's going to take a hit as well. So, in a sense, there's some punishment there, but also I think they may, look for some sort of permanent guidelines.
Right.
Could be developed from the Fed and maybe need a little bit of help from Congress, but I wouldn't expect too much.
Michael McKee, international economics and policy correspondent at Bloomberg News, joining us on the phone from New York City. Mike, thanks so much for weighing in on the latest. A redhead crossing the Bloomberg terminal. The U.S. moves towards settling steel tariff fight with offer to European Union. For more on world and national news, let's head down to Washington, D.C., where Nancy Lyons joins us. Hey there, Nance.
Hey, Tim. President Biden took his COVID-19 message to a local middle school, promoting the vaccination of teens and their teachers and assuring them we know what it takes to keep kids safe from COVID, including widespread availability of testing. Bloomberg's Irv Chapman has more from Washington.
The president noted that 65% of teenagers in the District of Columbia have had at least their first dose. Then he added this comment.
I am so disappointed that particularly some of the Republican governors have been so cavalier with the health of these kids, so cavalier with the health of their communities. One of the lessons I hope our students can unlearn, politics doesn't have to be this way.
The president said he'd reward every student at the school who gets vaccinated with a visit to the White House. In Washington, Irv Chapman, Bloomberg Radio.
House Democrats continue to work on crafting a $3.5 trillion tax and spending bill. Today, the House Ways and Means Committee has been looking at adding $22 billion to the Trade Adjustment Assistance Program that retrains workers when free trade agreements displace their jobs. Republicans say doubling the annual outlay for that is unnecessary. Apple has been ordered by a court to allow developers to steer consumers to outside payment methods for mobile apps. The order could take a big bite out of the profitability of the App Store. According to analysts, the App Store takes in more than $20 billion a year with a profit margin above 75%. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Brokers studios. Katie, among the most read on the Bloomberg terminal is a story by Rachel Ensign in the Wall Street Journal, Dow Jones today, about crypto fans borrowing to buy homes, cars, and yes, more crypto.
Yeah, and I mean, it makes sense. I mean, the crypto deposits, they earn a much higher average interest rate than what you would usually get. And I mean, this business is booming. There's some great research in here from the crypto firm Masari, which shows that one group of crypto lenders has about $25 billion in loans outstanding, both to individual and institutional clients. That's up from $1.4 billion just a year ago, Tim.
Wow, what I found so interesting about this is, as Rachel Ensign writes, quote, people use crypto-backed loans for the same reason they borrow against their stock portfolios, to reap the benefits of rising prices without diminishing the size of their bets. It's actually something that we've seen increasingly happen with people who do have large stock portfolios. If they need to make a big purchase, instead of like a house, for example, or buy something big, instead of actually selling the stock in their portfolio, what they can do is they take a line of credit out against their stock portfolio. And what that allows them to do is avoid selling their stock and reducing the size of their bet. But then it also prevents them from having to pay taxes on capital gains. And we saw that come under criticism a lot, especially with the extremely wealthy in this country from that series of ProPublica articles that was published earlier this summer. It's also happening with crypto.
Yeah, and let's keep in mind that we're reading the story on the same week that the SEC said that it's investigating Coinbase's proposed crypto lending product. It hasn't actually launched yet, but definitely crypto lending is really under the scrutiny of regulators right now, but it's clearly very popular and a growing industry.
I'm wondering how it ends.
I would love to know. Can you tell me?
I don't know, but this is a volatile, it's a volatile asset.
Yeah.
We saw that this week. We've seen it many weeks. So I wonder how this changes when the prices go up and when the prices go down. This is Bloomberg Radio, and this is Bloomberg Business Week.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Down Friday, Wall Street on track for a losing week. It has been a volatile day. Let's get all the details as we head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the red today after a positive start. Dow's currently down 125 points. S&P's dropped 14. NASDAQ is lower by 59. The U.S. 10-year yield at 1.34%. Gold is down 3. Transports rise 24. And among the main 11 S&P sectors, leaders were in the materials and energy, utilities, and healthcare were under pressure. Leaders to the upside in the Dow, Nike and Intel, while Apple and Walgreens led to the downside. And after earnings, Kroger fell 7%. In other news, Apple's App Store was dealt the blow by a judge in the Epic Games antitrust case. And wrapping things up, Amazon is seen as the frontrunner for NFL's Sunday Ticket. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's time now for our weekly crypto update. It's brought to you by IBKR, the professional's gateway to the world's markets. Their clients enjoy lowest cost access to stocks, options, futures, Forex, and fixed income from a single integrated account. Learn more at IBKR.com. Well, one way that lawmakers propose to pay for the $1 trillion infrastructure bill that the Senate approved last month is by imposing tax reporting requirements for cryptocurrency brokers. It's the way that stockbrokers report their customer sales to the IRS. It could open the way for tighter regulation of cryptocurrency, and that's something that the Biden administration is moving toward as it also pushes for tax compliance. Let's get into it with Danelle Dixon, CEO and Executive Director at Stellar Development Foundation, a nonprofit organization that uses blockchain to unlock the world's economic potential by making money more fluid, markets more open, and people more empowered. Danelle joins us on the phone from California. Danelle, it's great to have you on the show. This was a very contentious part of the infrastructure bill, and I'm wondering what your thoughts are on it.
Yeah, it certainly became so. It was really fun for us to see the influence that we could have from the blockchain and crypto space, and for us just to really engage with policymakers. But in the end, I mean, the language is what the language is, so it didn't change. But it was really fun to be able to engage and to try to really create that educational opportunity around with these policymakers.
And so, Danelle, this bill, I know it was roundly criticized by the crypto industry for being too broad. Can you walk us through exactly what was the language that got crypto advocates so upset? I mean, what was the biggest point of contention there?
Yeah, so I think it was the definition of broker. So that it was defined as any person who, for consideration, is responsible for regularly providing any service effectuating transfers of digital assets on behalf of another person. And so the argument and the concern was that there are many players in the space that run, for example, validators that just validate transactions on working on blockchains, but they don't actually have access to any information that traditional brokers would, and they don't act as brokers. So there was just concern that this was very, very broad language with technology that's very new and maybe not widely understood.
If you could write the regulation or write the legislation, what would you want it to say?
It's a great question. I think that the regulation itself should just have exclusions in it at the very least to talk about these, that think about blockchain more itself as infrastructure and think about these providers that are allowing and helping these transactions just to progress, that they actually are excluded from the bill. For example, like validators and folks who run nodes. There was language that was proposed that we were comfortable with, and that we actually, that it didn't ultimately make it through, but it would really just be excluding and making clear that it's not actually trying to go after these true infrastructure providers that are just helping blockchain to operate.
And so we've seen some efforts to try to change the language. Last month, there actually was an amendment that would change the reporting rules, but that was blocked by the Senate. So I'm curious, what's the path forward from here?
Well, I think that this actually created a really great opportunity for us because it showed that, first of all, there is this large constituency that policymakers are willing to engage with and listen to. And I think that the path forward is to create those open dialogues before you get to the language of a bill. I think that it's crucial to engage with lawmakers to discuss the use cases and the roles for different participants. And that's bringing industry experts and policymakers together. And so that's what we're really focused on doing now.
Which policymakers can you single out for us that really seem to get it?
Well, I think that there are many. I can't single out any particular, we actually had some that supported language that we wanted to bring to the table. But most importantly, I think it's that when you actually understand how the technology operates and what we're trying to do here, I think that, you'll understand that the definition of broker doesn't and shouldn't cover some of these players that don't have access to that type of information and frankly have no relationship to any of the participants who are making these transactions. So I think it's all of the senators and the members of the House that we need to really engage with, but it's also the regulatory agencies that we're really focused on participating with and engaging with. I think some of them understand what the technology does, but they don't have a knowledge of what the use cases can do and what it can and the value that can bring to their constituents. So it's a lot of work for us to do in the U.S., but I think it's actually really good work. And I think that, once we demonstrate that excluding their own constituents from this really useful and valuable services that are offered through blockchain, they're going to want to be a part of it, and we're going to be able to help them to get there.
And so, Danelle, stepping back a little bit, it definitely feels over the past few months that regulators have started to circle crypto, whether it's the U.S. Congress with the infrastructure bill or just the SEC this week, cracking down on Coinbase and really investigating their proposed lending product. I'm curious, what do you think is on the radar next? And we have just about 30 seconds here.
Well, I think that what a lot of focus right now is on the decentralized finance space. And so I think that we're going to see, we just have to provide a lot more education around that. I want us to be able to demonstrate the value of this technology neutral opportunity that we have that's made in the open and valuable to everyone. So I think we need to focus on a lot of different areas, but that's, I think, the next target space.
Danelle Dixon is CEO and Executive Director of Stellar Development Foundation. She joins us on the phone from California. Stellar Development Foundation is a nonprofit organization that uses blockchain to unlock the world's economic potential by making money more fluid, markets more open, and people more empowered. It's Bloomberg Business Week, and this is Bloomberg Radio. Coming up in just a few minutes, it's the song of the day, the chart of the day, and the stock of the day. Don't miss it. This is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. Katie, it's a historic day. Do you know why?
I do. I don't know if you want to tell our audience.
Well, it's a day that Dave Wilson has actually allowed me to choose the song of the day.
That's huge for
It's
you.
huge.
Yeah.
I saw him really early this morning. He said, check out the chart, choose a song, send it to our producer, Paul Brennan, and we'll take it from there. So there's a lot of pressure on me, but I think he felt so bad that I just couldn't get the song right. So he's like, okay, I'll let you choose it, see if you can. I got to get it right today. That's the thing. We're going to study a little bit more. In the meantime, let's get a check of the trading day with Charlie Pellet.
All right, we have got the Dow, the S&P, NASDAQ, all on the minus side. 28 minutes to go ahead of the closing bell as we await that crucial song of the day. Right now, we've got the S&P down 21, drop now of 0.5%. Dow Industrials down 160, lower by 0.5. NASDAQ down 90, a drop there of 0.6%. 10-years down 13.30 seconds. 10-year yield right now 1.34%. Volatile is the word of the day, perhaps, when it describes today's trading. Is there a song with volatile in the title? Investors assessing the latest read on the economy after more strategists weighed in with cautious comments about the market. 10-years down 13.30 seconds. Again, 10-year yield 1.34%. Spot gold down 0.3%, 17.88 the ounce, while West Texas Intermediate crude oil up 2.4%, 69.74 a barrel. President Biden yesterday laid out a sweeping plan to combat the pandemic, including a requirement for all large companies to mandate shots or testing. As for large public gatherings, sporting events, for example, are we putting ourselves at increased risk? Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. And on Bloomberg TV and radio this morning, he told us young people cannot get complacent.
Our data, particularly with the Delta variant, is suggesting that severe disease is skewing to younger populations, and those individuals between the ages of 20 and 49 or so that were initially spared a high rate of severe disease in the initial waves of the pandemic are now coming down with severe disease at a much higher rate. And let's not forget long COVID, which can affect people even with mild disease, and people can suffer symptoms from that for weeks and months after infection.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer down 0.8%. Its German partner BioNTech down 0.5%. AstraZeneca up 0.2%. The ADRs there. Moderna lower by 1.2%. Johnson & Johnson down 0.4%. We're brought to you by Land Rover, introducing the Land Rover Defender, Motor Trend's 2021 SUV of the year. Put the Defender's capabilities to the test at your local Land Rover retailer. Land Rover, above and beyond. Again, recapping, equities lower here. S&P down 21, a drop now of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
I give you the keys to the kingdom, and you pick the same song that I would have.
Are you serious?
Quite.
Guys, I'm getting goosebumps.
As you should be for Bruce Springsteen's The Rising, the title track of his post 9/11 album. By the way, I was actually on a Zoom discussion of that record last night, run by the folks at Monmouth University, my undergraduate alma mater down in New Jersey.
Also where you worked on records associated with Springsteen, right?
I never worked on records per se, unless you want to talk about archival records.
Yeah, that's what I mean.
Because it's now the Bruce Springsteen Archives and Center for American Music that's down there. And before that, it was the Bruce Springsteen Special Collection, which was started by fans. I was involved with that.
It's a special song to me, too, because it's what introduced me to Bruce Springsteen. I think I was 18 or 19 years old then. And the Bruce Springsteen and the E Street Band hadn't had a new album out for years. And
True.
then they went
This
on
was
tour.
actually, if you take it from a band perspective, it was the first album that they did together since Born in the USA back in 1984.
So my dad went to the Born in the USA tour. He went to a show there. I took him for his 50th birthday to a show in San Francisco on the Rising tour.
And there you go. I mean, and since the Rising was inspired by the events of 9/11, that's why you picked it. That's why I would have picked it, and it's all about the chart. So let's take a look at it, at least, on YouTube. You've got the S&P 500 for the past 20 years. It's had a decent run. Works out to a 7.3% compounded annual rate of gain. It's more than tripled over that time. But I decided to go back and look at the previous 20 years leading up to 9/11. And what we've seen more recently doesn't hold a candle to what we saw back then. I mean, you had an annual growth rate of close to 12%. And, if not for the last year and a half, which, you had the bursting of the dot-com bubble, I mean, the comparison would have been even more skewed toward the earlier period. It just goes to show you, things do come and go over time. And how often do you get to see a 20-year chart anyway? I suppose that's as much a reason as anything to make that comparison. And if you want to see it for yourselves, folks, send me an email. I'll get it to you with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
It kind of flies, Dave, in the face of conventional wisdom, or at least conventional discussion about how well the S&P 500 has done in recent years.
Well, and you think about like the 54 records for the index this year, you think, oh, things are going great. And actually, they have been for the past year and a half. But, compare that to what you saw over really the 5 to 6 year stretch, which sort of encompasses the dot-com era, if you will, Internet 1.0. It's a whole different ballgame.
Not a bad 40 years to be invested in U.S. equities.
No, not bad. Certainly would have been better earlier, though.
Dave, we got about a minute left. Give us your chart of the day.
Okay.
Your stock of the day.
All right, then. Now we're talking A-Mark Precious Metals. The ticker on this one is AMRK. I mean, they deal in gold and silver and platinum. They also distribute coins for government mints. And they were out with fiscal fourth quarter results late yesterday that went over pretty well. Earnings and revenue beating analysts' average estimates in Bloomberg's survey. There isn't much in the way of analyst coverage, just two analysts, Roth Capital Partners and D.A. Davidson, nonetheless, beating their projections. And, the shares, well, they set a record earlier today, and at the moment, they're up 14.5%.
And 132% so far this year. Check out Dave's stock of the day. It's just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at the One Dave. Dave, I don't know if you gave the shout out to your how to get on your list for the chart.
I did, actually. I snuck it in there, Tim.
Okay, good. I wanted to make sure you did it. dwilson@bloomberg.net. Dave Wilson, stocks editor for Bloomberg News. Dave, have a great weekend. Let's get a check of the latest world and national news. Nancy Lyons is in D.C. Hey there, Nancy. Hold on. Well, it looks like we are trying to get Nancy Lyons with a check of world and national news. In the meantime, let's get a check of the markets and see how things are looking. Just about 20 minutes. Wow, Katie, time flies when you're having fun, right?
When you're hosting radio with a friend, it sure does.
Oh, that's so nice. She has to say that because we spend 4 hours a day together. We are seeing stocks lower across the board. In fact, the S&P 500 is taking a leg lower as we do get closer and closer to the close, down more than 0.6% as we speak. The Dow down more than 0.6%. The NASDAQ, though, down 0.7%. Interestingly enough, Katie, you and I were talking about this a little earlier. The average volume today on the Dow Jones Industrial Average is higher by 34%.
It is pretty nuts, especially when you look at what the S&P 500 is doing. Volume is actually a touch lower there, but Tim, you and I were talking. This is probably directly related to the volume that Apple is seeing big name in the S&P 500, but the Dow, as we know, only 30 names. So the fact that Apple is just seeing such crazy volume definitely affects the broader index there, the Dow Jones.
Yeah, that's right. It looks like also that Apple has volume right now of 19.9 million, which is just massive compared to what you see with the other stocks in the Dow Jones right now. Yeah, I mean, Microsoft is at 3.5 million. This is Bloomberg Business Week, and this is Bloomberg Radio. It's Bloomberg Business Week. I'm Tim Stenevec. I'm joined by Katie Greifeld. Katie, this story among the most read on the Bloomberg terminal. We're talking about the LaGuardia Air Train. It's coming in at a massive price, and that translates into a massive price per rider. Take us into the details.
Yeah, so we are talking about the Air Train project to LaGuardia Airport here, set to become, again, the world's most costly transit project per rider. That is according to a report from the government watchdog Reinvent Albany. And again, this was championed by former New York Governor Andrew Cuomo, and Reinvent Albany trying to play politics here a little bit, saying that if Governor Hochul allows the Port Authority to proceed with this Cuomo-era project, that it would just be massively, massively expensive.
Well, remember what it's for. It's supposed to provide a faster link between Midtown Manhattan and the airport, and also allow travelers to avoid traffic that leads to and from the airport. You can get to LaGuardia a few different ways if you take public transit right now. You can get there on the bus at in the northern part of Manhattan. You can also take the subway to Queens and then take another bus. I've done it both ways. But I think the point is that it's much easier to get to Newark Airport by rail, and also much easier to get to JFK Airport by rail. Both of those airports offer public transit on rail in order to get you from Manhattan or even parts of Brooklyn there.
Yeah, it is just comically difficult to get to LaGuardia. But still, I mean, this
really
group
is.
estimates that the AirTrain project would carry fewer than 6,000 net transit trips a day. And I mean, when you think about how much ridership the subway sees, it's pretty minuscule.
Well, last month, the Port Authority told Bloomberg News that it was committed to building the LaGuardia Air Train after some staff members urged officials to put brakes on the project. Have you been to LaGuardia since the construction happened? It's actually not bad. I was pleasantly surprised by it when I was there recently. I was like, wait a second, where did I actually land?
Yeah, I've heard it's actually nice.
Yeah.
I'd like to see it.
A very New York-centric story for all of the New Yorkers out there. This is Bloomberg Business Week, and this is Bloomberg Radio.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell, and we are on track for a losing session for the week. Looks like a loss of just about 1.6%, biggest weekly decline since mid-June. A volatile session today as investors assess the latest read on the economy after more strategists weigh in with cautious comments about the market. S&P 500 index now lower by 29 points. Again, lows of the day down 0.7%. The Dow down 224, down 0.6. NASDAQ is slumping 115, now down by 0.8%. NASDAQ 100 index down 0.7. Russell 2000 also down 0.7. Dow Transport's now lower by 0.3%. 10 years down 13.30 seconds. 10-year yield 1.34%. Gold down 0.3%. Spot gold is at $17.88 the ounce, and West Texas Intermediate crude up 2.2%, $69.63 for a barrel of WTI. Apple ordered to make a major change to the way it generates money from its App Store. Right now, Apple also weighing on markets, down by 3.3%. Recapping S&P down 0.7. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Bloomberg Business Week is brought to you by Land Rover, introducing the Land Rover Defender, Motor Trend's 2021 SUV of the Year. Put the Defender's capabilities to the test at your local Land Rover retailer. Land Rover, above and beyond.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed. It is time for the Drive to the Close. We are just about 10 minutes away from the market close on this shortened trading week. It's Friday, September 10th, 2021. We are seeing red across the board right now. Stocks taking a leg lower as we do get to the end of the session. Let's get into it, though, with Ryan Dietrich, Chief Market Strategist at LPL Financial. He joins us on the phone from Charlotte, North Carolina. Ryan, great to have you back on the show. Really glad to have you on a day like today where we are expecting to see a fifth day of consecutive declines on the S&P 500. And I'm wondering from a technical analysis perspective, what signal that's sending you?
Yeah, Tim, thanks for having me back. But you're right, guys. We're looking at, again, a 5-day losing streak. I was just looking into it. Is it something to really be worried about? Now, here's what you need to know. The last 5 days, the S&P is down about 1.4%. All right, that's the smallest 5-day losing streak since one way back in October of 2016. And you think about it like this, last year, 2020, we saw 35 single days with a worse return than we've seen the previous 5 days. So put a bow on this. Yes, down 5 days in a row is going to be the headlines. But to us, it looks like a normal consolidation. It is September, the worst month of the year. You know, there's some different factors there. But after more than 104% rally off those lows since March 2020, maybe just some seasonal weakness is happening. And again, it's relatively contained. We're not overly concerned right now.
So the sky is not falling. Keep things in perspective. Is that what you're saying?
Yeah, we've been trying to say that for a while, I think. I think there's always scary things to look at. I mean, and trust me, the worries are out there. You got the Delta concerns, the recent, obviously, economic data is not doing that great. What's going on with Washington? What's going on with the Fed? We understand a lot of the concerns, but the bottom line is just look at those earnings season. We just had record earnings season. Earnings are up 26% above the peak back in 2019. So, yes, stocks are close to all-time highs. Earnings are also at all-time highs and growing still really, really nicely. So there's worries. Don't get us wrong. But, this bull market looks alive and well. But saying it with you feel like a broken record saying this market's going higher because the economy is still strong. We still feel that way. And we still think there's, time to go to this bull market.
So, Ryan, we're coming off of a record earnings season. We also saw a record PPI this morning. I mean, if you look at the producer price index for the prior month, it was way above forecast at a series high. How are you thinking about inflation here? How does that factor in to what you're saying, this still strong economy?
Yeah, Katie, I mean, that's a great question because clearly that's the headline. If you look at the core PPI, it was a little bit lower, but still, things are more expensive. I mean, it's $5 to get a gallon of milk, at least $3 to fill, per gallon to fill up your car. So people are feeling that. There's no doubt about it. But when we look at what's the market saying, is the market truly worried about inflation? And when we see things like the 10-year yield well off the 171 level from back in late March, we see copper well off the highs, lumber off the highs, break evens are well off their recent highs from a few months ago. Inflation's there, but it doesn't appear like the market is extremely worried. It's hard for us to see gold just flatline at 800 bucks an ounce and not be soaring if the market was worried about inflation.
Ryan, I just want to cut you off there because you gave us a lot of data, and I just want to know the single signal that those things you just mentioned send. What are they?
Yeah, the market is not as worried about inflation as I think the media. a lot of people are. The likelihood that inflation turns to a 1970 style spiral. The stock market, just the market in general, market participants are not voting on that when you see a 10-year yield still around 130. It's hard for us to believe that.
And so, Ryan, I'm glad that you brought up break-evens, and they've definitely cooled a little bit from their decade-plus highs. If we look at 10-year break-evens, the long-term inflation outlook, though, looks kind of sticky. I mean, it's not at the very peak anymore, but it's really just bounced back and forth in this range. I wish I could show our listeners a chart because it is amazing. I mean, what does that say to you? That, okay, maybe we're not seeing an inflationary spiral, but it seems to suggest that inflation is going to stick around at an elevated level for at least a while.
Excellent point. We had barely 2% inflation for like the whole decade, right? Then COVID happened and the economy came back, all the supply chain issues. It's likely that we'll see, maybe 3.5% inflation for a year or two. I mean, that's not historically abnormal inflation. Just when we lived in a 2% inflation world for so long, it's clearly higher. But again, it's not that 7, 8, 9, 10% inflation that we saw in the late 70s and early 80s. So I think it's a very key concept. You mentioned break evens. So a little interesting. Let's go around the globe here. Break evens over in Germany and Europe are actually breaking out to some of the highest levels. UK, I think it's a 13-year high. Germany's multi-year highs as well. So there are some more inflationary expectations starting to show up across the seas over in Europe. Now, what exactly does all that mean? Listen, that's to be a more difficult conversation, but we're seeing more inflationary worries overseas. We're just not quite seeing them here in the U.S.
So you said that we'll see 3 to 3.5% inflation for a year or two. Is that transitory to you, a year or two?
Well, not a good question. We all thought transitory in the beginning meant like 3 or 6 months, but I think we've all learned transitory means it's sticking around a little bit more. But when you had the worst, recession of our lifetime and the way the economy opened up with the supply chain issues, it still feels to us like a little bit higher inflation is okay, but again, it's just not that runaway. And maybe that is the new. I hate to say this is the new normal, but maybe 3 to 3.5% inflation for a couple of years is a little more normal. And again, that's kind of the long-term average of inflation if you think about it. I mean, you look at unemployment and inflation, the misery index, right? That's right around 10%. That's actually the long-term average of where inflation and unemployment have been historically going back 50 years. So it's a lot of ways to look at it, but again, inflation just to us is not quite the concern. And if it was, we don't think the stock market would be doing this good, and we don't think those commodities and industrial metals would probably be a lot higher if the market were truly worried about inflation.
Okay, so inflation, maybe it's not a concern. How do you position your portfolio around that? I mean, are you going into more duration-sensitive sectors, or what looks attractive to you right now?
Yeah, well, on the fixed income side of things, we have shortened up duration. We think there is likely coming higher rates. We've got the 10-year yield. We think it'll be up around 175 by the end of this year. Of course, that'll impact bonds, which trade inversely with higher rates. So we like mortgage-backed securities, which are not quite as impacted by higher rates. Now, that's the fixed income side of things. But on the other side of things, we do like the cyclicals, the financials, industrials, materials, the early cycle plays, along with small caps. Historically, early economic cycle of growth do better. Fully aware they started the year off gangbusters in the last 3-4 months, have struggled. But we really do think we could see another fourth quarter rally like we did last year in some of those areas. Do not forget last year, guys, the Russell 2000 small caps gained 25%, an all-time record fourth quarter last year. to me, small caps have just been consolidating most of this year. And we think that that leadership from the cyclical value area likely will take the baton before all is said and done in 2021.
Ryan Dietrich, Chief Market Strategist at LPL Financial. We're going to have to leave it there. Thank you so much for taking the time. We really appreciate you joining us on the phone from Charlotte, North Carolina. Stocks taking a leg lower. The S&P 500 down now by close to 0.8%. The NASDAQ by 0.9%. The Dow down by close to 0.8%. Well, coming up next, it's Bloomberg Beyond the Bell. It is our cross-platform coverage of the market close. We're going to be joined by our colleagues from Bloomberg Television. It's on Bloomberg TV, Bloomberg Radio, and on YouTube. Just 2 minutes away from the market close. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day, the trading week. Romaine Bostick, Caroline Hodge, Shanali Bastick in for Taylor Riggs, counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast. Tim Stenovic and Katie Greifeld in for Carol Massar, bringing together our Bloomberg Television, Radio, and YouTube audiences. Tim, peak cyclical optimism. Are we past it?
That's the question. I mean, for much of the day, stocks were kind of struggling to find direction, oscillating between positive and negative territory, until really just the last hour, when stocks took a leg lower and continued to move lower, with the Dow down by more than 0.7%.
Yeah, and it's interesting, still searching for a reason. We were just talking about potential whys with Ryan Dietrich. He is the Chief Market Strategist at LPL Financial. And look, September, it's a historically bad month for stocks. We're coming off of 20% year-to-date gains. Maybe it makes sense to take a little bit of profit heading into the weekend. But I will point out this is the 5th day of losses for the S&P 500. Shanali, that's the longest streak since about February.
Certainly, and maybe you have Gina Martin Adams moving the market out with a note today on producer prices too high for the S&P. That is dealing with the slowdown. It's raising a red flag for those S&P companies that are dealing with that margin pressure. Let's see how long that sticks.
Friends, I call it Apple. Down almost 10 points a drag on the S&P 500. Like, not many of the benchmarks could sustain the biggest company from a listed perspective in the US taking such a nosedive on the day. And that's all to do with Epic Games. It's interesting that some of the other gaming companies are rallying on that news.
Yeah, absolutely here. And, we should point out, at 2 o'clock, when me, Caroline, and Shanali came onto the television air, we had Ross Mayfield over at Baird, and we were sort of joking about the fact that the correction in this market from that all-time high on September 2nd was only about a 1%. Well, in the last 2 hours, that's extended to about 1.7% here. So that fabled 3% correction, that may actually be in the cards here. A 10% correction, which I thought was the definition of a correction. That's still a little bit of a ways off here. All right, let's get you caught up here on the numbers. 34,607 on the Dow Jones Industrial Average. That's going to be down 272 points, or 0.8%. The S&P down 35 points, or 0.8%. The NASDAQ Composite down 133 points, or 0.8%. And stop me if this sounds familiar. The Russell 2000, your underperformer here on the day, actually down 1% here on the day.
I want to go back to what Caroline said about Apple, because you're actually seeing a really interesting story play out when it comes to volumes. Change in volume over the last 30 days on the Dow higher by close to 40%. That's thanks to Apple and Apple's position on the Dow.
The Dow. We're doing the Dow now?
Well, just for volume, it just shows the power and how many people are and how much shares of Apple are trading. It's wild.
I like the perspective.
Volume is higher too when it comes to the NASDAQ, but with the S&P 500, it's relatively
biggest weight in
compared to
S&P
averages.
500 down 3.3% on the day.
Yeah.
And let's look at how that all feeds in from a sector perspective, because we drill down and look what's your worst performing on the S&P 500 in terms of your underperforming sectors, off by almost 3%, is tech hardware, equipment. Of course, that's Apple, but it's also some of the companies related to Apple, Seagate and the like. They're all being dragged lower. Interestingly, auto is getting sold off hard as well, off by more than 1.6%. You got Tesla to thank for that, largely because Cathie Wood has been trimming some of her profits there, and we see that Tesla is headed lower. But banks not looking pretty, even though yields are pushing higher today. Banks on the downside, real estate on the downside too, food staples. That's all thanks to Kroger, of course. I'm not going to steal all the thunder of the individual movers, but clearly that was a key mover on the day. On the upper side, in the green, well, basically it's just chip stocks that are outperforming on the day. Semis, your key winner, up more than a percentage point. Katie.
Well, sticking with what's in the green, I want to highlight Affirm. This is a buy now, pay later company. Reporting earnings yesterday, and it blew past forecasts. Its fourth quarter revenue was above the highest estimates, and the future looks bright as well, at least according to Affirm's outlook. That's why the stock soared over 34% today.
Have you used that Affirm or any of those buy now, pay later things? Yeah, I haven't. I don't know anyone who does that.
I have.
Why wouldn't you?
Yeah,
I
we've
don't
tried
know.
financial products when you're reporting on finance.
I'm surprised you haven't. Kate, don't you own a horse, Katie? Did you just buy? Did you buy that all at once?
I paid up front. I paid up front, actually. Yeah,
Bad
it was
move, Katie.
painful. Maybe I should have checked out.
Everyone knows you put your horse on Affirm. I mean,
I would
Palatins, then a horse.
Would have been paying that off for a long time. But moving on, I want to highlight Zynga. This is an online gaming company. It also had a great day, and that is a direct consequence of that Apple ruling. Companies like Zynga now theoretically can link to external websites for payment for their apps, meaning that Apple theoretically shouldn't take a cut. That's why Zynga closed.
I'm sorry to interrupt you one more time because Zynga. I mean, this just brought.
Katie's playing Farmville.
He's not sorry.
It reminded me here, Katie, because Zynga. It's a lot of like these online quizzes. We have a quiz on the Bloomberg terminal that a couple of weeks ago you were just crowing about having won. I didn't notice your name in the rankings.
Crowing. Yeah, I'm embarrassed to admit I went anonymous this week. It was really ugly.
Oh, anonymous. Oh,
anonymous.
Is there a reason why you went anonymous?
I think actually my score wasn't so bad. I think it was about 170. Maybe I remember it exactly because it was that painful.
All right, what's UPS doing?
UPS. Well, this company announced today that it's acquiring Roadie. That is a same-day delivery startup. The amount was. Say that again? Oh, sorry. The amount was undisclosed. UPS already had a pilot program in place with Roadie, though, to test same-day delivery. Looks like they're making it official, and investors seem to like it because UPS finished about 2% higher or so.
All right, well, you got the gainers, I got the decliners. Apple, again, the big story of the day. That news crossing just before noon. Wall Street Times shares finishing down by 3.3%. Again, a court ordering that Apple can no longer force developers to use in-app purchases. It's why we're seeing companies like Zynga move higher and other gaming companies. Apple did relax its rules about a week ago. Mark Gurman pointed that out to us in an interview on Bloomberg Radio earlier, but we did still see other stocks move higher as a result, like Spotify as well. Alphabet also taking a hit because of that, because Epic and Epic and the parent company of Google, Alphabet, are also locked in head-to-head, and if bad news for Apple also could mean bad news for Alphabet as a result of the Google Play Store. Shares of Kroger also lower on the day today, fell as much as 9.1%, but finishing the day down by 7.5% after second quarter's gross margins disappointed Wall Street.
Have you seen that Kroger already has like Christmas decorations out?
It's not too early. I mean, I think it's after late. Well, look, it's not too early to be doing Christmas shopping.
Thanks,
Romaine.
You would make a great retail executive.
With the supply crunch,
Yeah.
Why not?
Yeah, we got to do our Christmas stuff early.
Well, how do you like that the hottest tech stock of the day is UPS?
I like it. They would call themselves, increasingly invested in technology.
Everything's a tech company. It's no longer a horizontal. Well, it's now horizontal, not a vertical. Let's have a look at what's going vertically red across my screen as I'm looking at global macro movers. FX, everything is down versus the US dollar. We're seeing the US dollar outperform. In fact, it was lower on the day at the beginning. And the moon music before the US came into play ball was actually, we were kind of optimistic on a Biden-Xi Jinping call. But now the moon music turned. We got more negative. We're worried about Apple. We're worried about just generally everything. Sentiment change. Dollar finds itself as a haven bid. The yen off by 0.1%, the euro off by 0.1%, as well as some of the European FX companies, FX pairs. Let's have a quick look at what's happening in commodities, though, because completely different story. In fact, we see oil managed to charge higher, up more than 2%. That is yesterday we saw perhaps it get knocked around by the fact that China was unleashing some of its oil reserves, but we nevertheless still see the effects of Hurricane Ida impacting infrastructure, impacting your production, impacting WTI crude that is up 2% at $69.58. Metals continuing to surge, aluminium among them, copper among them. That's why we saw Freeport McMoran do so well on the day in terms of stocks. Zinc is up 0.8%, and iron ore up more than 2%. On the red, every sovereign bond. We see Canadian, Portuguese, Austrian, Finnish yields just pushing higher on the day, Romain.
Yeah, well, let's talk about yields here because, I mean, look, we actually did have some movement here in the bond market this week here. Your 10-year yield is slightly higher. We ended last week right around 132 here. We're going to end it here right around 134 here. So a little bit of movement here. We did a lot of oscillation here in the real yields this week. At one point, we actually saw a negative 99 print here. So basically a less negative number in the direction that a lot of people think real yields should have been going. But now they're actually going to finish the week back down below that negative 1% level here. As far as your 30-year yield out on the longer end of the curve, you had about a 3.5 basis point move here on a weekly basis. But overall here, you can see we're still mired in a range that we've been in now really for the last 3 or 4 months.
Well, the big question I think that investors still have and that we continue to talk about each and every day, it seems like, is what happens when it comes to producer prices. Look for what happened this week, guys. When we think about Sherwin-Williams, we think about PPG Industries, the paint company, those companies saying, hey, wait a second, producer prices are getting so high for us, input costs are getting so high for us that we're actually going to have to decrease what we think we're going to be making this year.
Kroger had that issue as well, right? That was some of its issues, its margins being hit by supply chain issues.
It is the story. We didn't know how long it would last. What is transitory? But it's looking like transitory is going to last well into the near future.
Yeah,
we should get an update on transitory because we do have CPI on Tuesday. PPI obviously very hot today, and this is going to be one of the last top-tier data points that the Fed will have to look at before its late September meeting. So we'll see, transitory or not, inflation has definitely stuck around much longer than most economists and maybe journalists thought.
And to bring these points together, if you're spending more on your inputs, it makes it harder to spend money on technology. And you see that with UPS. I can't get over that price rise in UPS today. Spending a little money on technology gives investors something to hold on to.
All right. Well, I hope you guys all have a great weekend because that is going to do it for our cross-platform coverage on this Friday afternoon. Join us again at same time, same place on Monday on YouTube, on Bloomberg TV, and, of course, on Bloomberg Radio. Have a great weekend, everyone.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. Well, there you have it, Katie. The end of a shortened trading weekend is looking like a decline over the last 5 days for the S&P 500. The Dow finishing the day down by close to 0.8%. The S&P 500 lower to a similar tune. The Nasdaq, though, down by more than 0.8%. Let's head now to Washington, D.C. for a check of the latest world and national news. For that, we go to Nancy Lyons. Hey there, Nance.
Hey, Tim. The New York police and other state and federal officials are on alert this weekend as the nation commemorates the 20th anniversary of the 9/11 attacks. During today's security briefing, New York Governor Kathy Hochul admitted this is a vulnerable weekend, but she says they are ready.
You'll see individuals with long arms. You'll see them looking a little bit militarized. But the idea is to let anyone know that you mess with New York, there'll be consequences.
Hochul says New York City and Homeland Security have established a new sense of security for Americans. Today in Washington, where the Pentagon was hit on 9/11, FBI Director Christopher Wray spoke at the Terrorist Screening Center.
Because of September 11th, the FBI transformed itself in ways that have made us better able to carry out our mission to protect the American people and uphold the Constitution.
Wray says the FBI has never stopped working to keep Americans safe. Tomorrow, President Biden and First Lady Jill Biden will visit all 3 sites that came under attack on September 11th. Former Presidents George W. Bush and Barack Obama will also attend commemoration ceremonies. Bush will deliver the keynote remarks at the Flight 93 National Memorial in Shanksville, Pennsylvania. Obama and former First Lady Michelle Obama will both attend a remembrance ceremony at Ground Zero in New York City. Prince Andrew has until September 17th to respond to a lawsuit brought by an American woman who alleges she was forced to have sex with him when she was underage. Court documents filed today in the U.S. court say the affidavit was delivered to Andrew's home in late August. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons. Tim Stedevec and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. It's time now for a story that is among the most read on the Bloomberg terminal. This one written by my former colleague, Catherine Binley. Workers want to do their jobs from anywhere and keep their big city salaries. Sounds pretty good, Katie, especially at a time when so many companies want to get their workers back to the office. But over the last 18 months, people have said, wait a second. Can I do this job that I was previously doing in New York City or in San Francisco? Can I do that from Tahoe? Can I do that from the suburbs?
And I think for a lot of people, I mean, the answer is yes, that I've been doing this for a year and a half. Why can't I keep doing this? And it's a very human urge. And I mean, it's something that companies are going to have to deal with. I mean, one tech worker interviewed for this article, he moved to Austin from San Fran. That's a very popular relocation, but he's facing a 10% salary cut. That was back in January. And I mean, just anecdotally, I've heard a ton of that.
Yeah, we've also seen responses. I mean, not even in recent months. In the midst of the pandemic, we heard from companies like Facebook that said, okay, well, if you do want to work remotely, that's fine, but we are going to have to do a resetting of your salary if that's something that you choose. I think another part of this story, and this is something that we talk about a lot, Katie, is the idea that there's so much competition for talent right now, and companies really have to think about this quality of life policy and to what extent that can attract and retain talent or actually serve in the opposite direction and, detract talent or cause people to actually leave from your organization because they're not perceived as being flexible or not perceived as having the same perks as other companies that allow people to work from home.
Absolutely. I mean, it feels like remote work or just location flexibility. It's definitely emerged as a sort of perk of sorts that companies can offer. And that's on the other side of these salary reductions that we're talking about. So it's really interesting tug of war. It's going to be interesting to see how on a national level companies respond.
Yeah, what sticks after the pandemic whenever we do get there. This is Bloomberg Business Week, and this one is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 5 losing days in a row for the S&P 500 index. Equities notching their biggest weekly decline since mid-June, down 1.7%, a volatile session as investors assess the latest read on the economy after more strategists weighed in with cautious comments about the market. Today, the S&P was down 34 points, down by about 0.8%. Dow Jones Industrial Average down 271 points. The Dow down 0.8%, NASDAQ down 132, down 0.9%. 10-year fell 12.30 seconds, 10-year yield 1.33%. Gold down 0.4%, 17.88 the ounce, and an advance for West Texas Intermediate crude up 2.1%, 69.58 a barrel. The Apple moved lower after a court ordered the iPhone maker to make a change to the way it generates money from its App Store. Apple lower today by 3.3%. Again, recapping, stocks lower. S&P fell 34 points, down 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as we've been talking about throughout the day, tomorrow marks the 20th anniversary of the September 11th attacks, a solemn day and a solemn week here at Bloomberg as we reflect on what the past 20 years have been like, and we all do remember that day and where we were when we first learned about it. Alice Greenwald is president and CEO of the 9/11 Memorial and Museum. She joins us on the phone from New York City. Alice, thank you so much for joining us on what I know is a very solemn day and has been a very solemn week. How do you feel on a day like today?
You know, it is a day with a weight of emotion, I would have to say. I started the day meeting with a group of 9/11 family members and hearing their stories and talking about the process of putting this museum together so many years ago. And, you know, 20 years is like yesterday when something of this import happens. And for the families, their grief is no less today than it was 20 years ago. So there's a weight of emotion to the day, but there's also this recognition that 20 years is the span of a generation. And there's an entire, you know, group of people, age 25 and younger, who don't carry the memory of that day with them. You know, most of us have that day seared into our consciousness if we were alive on September 11, 2001. It's something we will never forget. And as you say, everyone who witnessed it remembers exactly where they were when it happened. But there are probably 100 million people who were either too young in 2001 to understand what was going on or born since 2001 in this country. And there's a need, I think an imperative, to educate this next generation. You know, that we are moving in a way from memory to history with this milestone anniversary.
Alice, I think that's such a good point. I mean, I think about my husband's youngest sibling. They were born in 2003, born and raised in New York City, but obviously they weren't alive for the actual event, which is pretty crazy to think about. But Alice, walk us through what tomorrow morning will bring as you commemorate the 20th anniversary. What will that program look like?
Well, it will be consistent with what we've done in past years.
I'm looking right now at spreads. The extra yield that investors are earning over benchmark rates on high-yield bonds at the lowest now since July. They've retraced a lot of their gains. We're seeing a huge bid into treasuries every time the yields bid up at all. And I'm wondering, what's the trigger here? You've got international rates where they are. You have longer-term growth expectations.
At the World Trade Center when the building was bombed by terrorists. So, you know, reading 2,983 names can take 4 to 4.5 hours. And family members get up and read the names and the names of their loved ones, the names of others, and often they will stop to comment on the person they are remembering. One of the things we've seen in recent years, and I think this year we're going to see much more of it, is that the readers get younger and younger. So you have, grandchildren who are reading the name of a grandparent they never got to meet, but feel they know because of the stories their families have shared, nieces and nephews. It's very poignant. This is the next generation, and they are taking on the mantle of remembrance. It's really very powerful. There are 6 moments of silence. A bell is rung for each of the moments of impact of the hijacked planes into the Twin Towers, the attack at the Pentagon, the crash of Flight 93, and the 2 collapses. And this year, really in recognition of the significance of a milestone anniversary, we are adding a number of musical components to the ceremony. So I think it will be very special, very meaningful. And, we will be hosting dignitaries as well as probably thousands upon thousands of family members from around the world.
Well, the ceremony will be exclusively for families of those who we lost on 9/11. I'm wondering how people who want to commemorate this and want to be a part of it, but physically can't be there, can join.
Well, it is live streamed. And it is also broadcast. So it is possible for people to observe the ceremony by going to our website, by turning on various news channels. It's fully accessible in that sense. And we also, we open the memorial pretty much an hour or so after we've concluded the ceremony, so that the public can come onto the memorial on the day of the anniversary. And we keep it open till midnight because it is the most meaningful vantage point you can imagine for seeing the tribute in light, the 2 beams that go up 4 miles into the night sky. You just look south from the memorial, and there they are. So, the public can certainly come to pay respects and to be with us for the viewing of the tribute in light in the evening.
Alice, stick with us because in just a few minutes after we do some news, we're going to come back to you and speak with you more about the 9/11 Memorial and Museum. That's Alice Greenwald, President and Chief Executive Officer of the 9/11 Memorial and Museum. She joins us on the phone from New York City. Katie, I know it's at this point, it's kind of cliche for us to say everyone knows where they were, but it is absolutely true. If you were old enough to remember, that is the day that is seared in your memory.
Absolutely. And I was sitting in school in New Jersey, about an hour away from New York City. And I just remember my teachers leaving throughout the day. I didn't know what was going on, but I knew it was big.
I was thousands of miles away in California, and it was a very terrible day for us there as well. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Brokers Studio in New York. In just a few minutes, we're going to be getting back to Alice Greenwald. She's president and CEO of the 9/11 Memorial and Museum. She joins us on the phone from New York City, giving us an idea of how the Memorial and Museum is commemorating the solemn day tomorrow, the 20th anniversary of the September 11th attacks. In just a few minutes, more with her. In the meantime, let's get a check on the trading day with Charlie Pellet.
Hi, thank you very much. It was a down Friday, a down week as well. This update brought to you by Land Rover. Introducing the Land Rover Defender, Motor Trend's 2021 SUV of the year. Put the Defender's capabilities to the test at your local Land Rover retailer. Land Rover above and beyond. Another losing day for the U.S. stock market, with the S&P 500 index down 5 in a row. Ryan Dietrich is senior market strategist at LPL Financial. Right here on Bloomberg Business Week, he told us you got to keep it all in perspective.
The last 5 days, the S&P is down about 1.4%. All right, that's the smallest 5-day losing streak since one way back in October of 2016. And you think about it like this, last year, 2020, we saw 35 single days with a worse return than we've seen the previous 5 days. So put a bow on this.
Investors were assessing the latest read on the economy after more strategists weighed in with cautious comments about the market. S&P today down 34 points, down 0.8%. The Dow down 271, down 0.8. NASDAQ down 132, down 0.9. 10-year yield 1.33%. Gold down 0.3%, down $6 the ounce at $17.88. West Texas Intermediate crude up 2.1%, $69.60 a barrel. Bank of America has announced the most significant leadership changes since the financial crisis, replacing the chief financial officer and elevating 5 new members to the senior management team, including 3 women. DoorDash, Grubhub, and Uber Eats suing New York City over its newly entrenched cap on the amount that meal delivery services can collect from restaurants. The dating app Tinder has a new boss. She is Renate Nieborg, a former executive at mental health app Headspace and Tinder's first female CEO. She's not just the boss, but a former client. Nieborg says she met her husband on Tinder. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Let's get right back to Alice Greenwald, president and CEO at the 9/11 Memorial and Museum, who joins us on the phone from New York City. Alice, something that you said when we were speaking just a few moments ago really struck me, and it's the idea that so many people weren't around on 9/11, and they don't have it as a memory. So part of what you're doing at the museum is creating a place where they can learn about the history of what happened. And it makes me think of your previous experience when you were at the Holocaust Museum, Associate Museum Director of Museum Programs at the United States Holocaust Memorial Museum, and a similar transition in the way that we have fewer and fewer people now who were alive to experience that period in world history. And I'm wondering what parallels and learnings you draw from your experience there when creating and designing this museum.
You're absolutely right. And you know, the power of real people telling their stories cannot be underestimated. And, you know, when one hears a Holocaust survivor, you can never forget what you've heard because there's such authenticity in the telling of a story, a personal story, a human story. And, you know, that very much informed the way we designed the 9/11 Memorial Museum. It is a storytelling museum. It is filled with, you know, recordings, both retrospective and in real time from the day of the attacks, people who were witnessing it. You know, we live at a time when there's a tremendous amount of audio material, whether it be voicemails or cockpit voice recordings or radio transmissions between first responders or oral histories. We can allow our visitors to understand the story from the inside, if you will, from the voices of real people who witnessed it and who lived through it, and even some who did not have the good fortune to survive. So that, we believe, is the power of the educational program of this museum. And today, following that same logic, we are hosting our annual Anniversary in the Schools webinar. It will be today and tomorrow. Usually we do it only on the day of the anniversary, but since school is not in session on Saturdays, and this year the anniversary does fall on a weekend, we have begun today, and we have over 1 million students registered to watch a video that features a number of people, young people, who are now in their late 20s and early 30s, but who were kids on 9/11 20 years ago. And they are sharing their perspective of what it was like as a kid to go through that day. And I believe the power of that storytelling will help students both want to learn more about this historic event, but also feel more connected to it. And I think that's really important. You know, I'm looking out my window right now onto the memorial grounds, onto what used to be called Ground Zero. And people have said that this site is where history began, the 21st century began. And this generation is going to grow up and become the custodians of the 21st century. And they need to know where it started and how it started, to be kind of literate citizens of not only this country, but of the global community. So we really do see educating the next generation as a key focus of the museum. And in that regard, you know, we launched this year a new awareness campaign and fundraising campaign called the Never Forget Fund, neverforget.org. And all of the, we're really inviting people to partner with us in this effort and to help provide the support that will enable us to do the kind of educational programs that allow us to teach this next generation.
And so, Alice, the anniversary also falls in the midst of a still ongoing pandemic. I'm curious how that affected your plans for the commemoration, and we have just about 30 seconds.
Yeah, well, of course, you know, we have very stringent health and safety rules and regulations at the memorial and the museum, and we are implementing those in the context of the commemoration as well. You know, we're asking people to wear masks. We're going to hope that people will socially distance and try to encourage that. But of course, the memorial is held outside, which helps enormously in this time of pandemic.
Alice Greenwald is president and CEO of the 9/11 Memorial and Museum. She joins us on the phone from New York City. Alice, thank you so much for taking the time. We really appreciate it. A big question. Katie, have you been able to visit the museum? I've been there in the past. And
I actually haven't been.
Yeah, it's a really, really powerful tribute and a really powerful reminder and deep dive into the history. I encourage everybody to check it out if they do get a chance. This is Bloomberg Business Week, and this is Bloomberg Radio. Let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is there. Hey, Nance.
Hey, Tim. Britain's Prince Andrew has been served at his London home with a lawsuit that was filed by a woman who claims she was recruited by Jeffrey Epstein as a teen and then lent out for sexual purposes to powerful men, including the second son of Queen Elizabeth. According to a witness statement filed in Manhattan federal court, the Duke of York did not receive the papers himself, but they were taken by the officer on duty. So far, no comment from the prince. He has until September 17th to respond to the suit or face a default judgment. President Biden and First Lady Jill Biden are pushing to keep schools safe during the pandemic. They took that message today to a middle school in the nation's capital.
The safest thing you can do for your child 12 and over is get them vaccinated. That's it. Simple, plain, straightforward. Get them vaccinated. So parents, get your teenagers vaccinated.
Biden says vaccines are safe and easy to get. But what about younger kids? As Bloomberg's Nathan Hager reports, it's looking likely it will take a while longer before vaccines are approved for them.
The FDA says it's working around the clock to support making COVID vaccines available for kids 12 and under, but can't offer a specific date or timeline. In a statement, the agency says its emergency use authorization review is likely to take weeks rather than months, but will depend in part on the quality and timeliness of manufacturer submissions. FDA says it understands parents are anxious about protecting their children as schools reopen. It says they very much hope to have pediatric COVID vaccines available in the coming months. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Well, a big shakeup at the top level of Bank of America today. An era of power brokers near the top of Bank of America is ending as CEO Brian Moynihan elevates a fleet of younger executives, Katie, into the ranks of eventual potential successors.
Yeah, so that was interesting in itself. What's maybe even more interesting is that the moves stopped short of identifying a clear successor for Moynihan. He's 61 years old. He's also one of the longest-serving heads of a U.S. bank of that level. So we'll see. The role still, the successor role remains open. Also notable, they didn't identify a new chief operating officer, Tom Montag. He announced his retirement last month. That role still hasn't been filled either, Tim.
Well, the shakeup gives two men with years of experience at the bank significantly more stature. Alastair Borthwick will take over as CFO, while Dean Athanasia will add responsibility for the commercial bank to his role, overseeing the consumer and small business banking operation. Borthwick currently serves at the head of the lender's expansive commercial banking operation, which serves mid-sized companies and industries such as real estate and education. 52 years old and joined the executive management team, Katie, back in 2020 while working closely with Montag on deals.
Yeah, and it's interesting. I mean, we've just seen so much turnover at the very top of Bank of America following Montag's announcement of his retirement back in August. And I mean, Tim, it's still interesting to me that last month when he retired that the bulk of his responsibility is now being shared by 3 separate people rather than one clear successor. So we'll see what happens there. A lot of turnover right now at Bank of America.
Yeah, and certainly a lot of eyes watching, especially for succession. Executives across Wall Street had been watching to see who might take Montag's position atop the investment bank. That's a decision that could send a signal about the firm's strategy, also the firm's appetite for risk. Instead, the heads of key businesses such as Demer and Coder and Athanasia, they will report to the company's CEO. Check this one out at Bloomberg.com and on the Bloomberg Terminal. This is Bloomberg Business Week, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We begin with a developing story and a headline from the Bloomberg Professional Service. Sources tell Bloomberg Stripe, the digital payments company last valued at nearly $100 billion, is in early discussions with investment bankers about going public as early as next year. Equities notched their biggest weekly decline since mid-June this week, down 1.7%, and it was a holiday-shortened week in volatile trading as investors assess the latest read on the economy. More strategists are weighing in with cautious comments about the market. Today, the S&P fell 34, down 0.8%. The Dow dropped 271, down 0.8%. Nasdaq down 132, down 0.9%. 10-year down 13.30 seconds. 10-year yield 1.34%. Spot gold down 0.3%. 17.88 the ounce, and West Texas Intermediate crude up 2.2%. 69.62 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These funds are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
Well, we've spent much of the last hour of Bloomberg Business Week today focusing on the solemn anniversary that comes tomorrow, 20 years after 9/11. I want to point now to a particularly poignant story on the Bloomberg terminal and available at Bloomberg.com. It is today's Big Take, the very best of Bloomberg's in-depth original reporting from around the globe every day. It's called Generation 9/11, following parents they lost onto Wall Street. Children of those killed on September 11th are continuing their parents' legacies in the world of finance, some at the very same investment firms. Joining us now to talk all about it is Jenny Serrain, finance reporter for Bloomberg News. She's with us in the Bloomberg Interactive Brokers studio. Jenny, I got to tell you, this story, it hit me really, really hard.
Yeah, it's definitely a somber topic, but there was also some kind of inspiring notes, I thought. You know, you've got adults, honestly. They were kids when this happened, but they're adults now and, you know, kind of following their parents' path into finance and finding their own way and kind of the different joys that they find in that industry. So obviously an incredibly sad and tough week for these folks, but you can kind of see some of the inspiration that they're getting from those they lost.
Yeah, this is a beautifully reported story. I encourage everyone to check it out on Bloomberg.com. And I'm curious, Jenny, what sense did you get from some of these now adults whose parents were killed, in some cases working at the firm that their parents worked at? I mean, was that an urge to sort of follow in their parents' footsteps or more just a natural place to end up?
Yeah, it's a really interesting, I think there's probably lots of different stories for every single person this applies to, but what was interesting in some of our reporting was, you know, in some cases this wasn't a desire to follow exactly in their parents' footsteps. This was actually just finding that they liked math just like their dad did, or they're good with numbers just like, you know, their father was. And so kind of finding finance through their own passions. You know, we talked to Jimmy Dunn from Piper Sandler, and he even said, you know, if anybody said that they were doing this just because they wanted to follow in their parents' footsteps, I would tell them, no, you've got to live your own life. So it's interesting how, you know, 20 years on, you see these then kids, now adults, just really finding their own path and ending up exactly where their parents ended up.
Well, one of those people is Maggie Smith. She's 22 years old. And her father, Jeffrey Smith, was one of the 2,753 people who died after the attack in New York City on September 11th. What's her story?
Yes, so that's exactly right. You know, one of the things that a lot of these companies who were hard hit by 9/11 did was set up scholarships and different programs for the families that these employees left behind. And so Maggie is actually a good example of that, because it's my understanding that she took the scholarship that Sandler O'Neill and Partners had set up. And it's just a really interesting look at how these programs that were set up, 2 decades ago still are kind of reverberating through finance today, and a really tangible outcome for Maggie and for lots of other now adults like her.
And so let's talk about some of the firms that were hardest hit. I mean, Cantor Fitzgerald obviously springs to mind. I believe 658 employees in total were actually killed in the towers. You also have Boutique Bank, Keefe, Bruyette, and Woods. 67 of the 171 New York employees were killed in the South Tower. What were some of the other names affected?
Yeah, I think the other big one that a lot of folks, point to is usually Sandler O'Neill, which is now Piper Sandler. I think that they had dozens of employees die in the towers as well. I mean, Bloomberg itself, I don't think there's honestly a finance firm in New York that wasn't impacted in some way. There was a financial conference going on that day, right in the restaurant at the top of the World Trade Center. So I think it's definitely something that you hear lots of Wall Street executives talking out about today in terms of where were they on 9/11 and the folks that they lost and the people they remember.
Well, speaking of remembering, some of these kids were so young that they probably don't have that many memories of their own parents.
It's a really interesting aspect to all of this. So the estimates are that there's about 3,000 children whose parents died in the attacks, and yeah. So for some of them, it's a memory, but in a lot of cases, it's just stories that they've been told their whole life. And we have a whole new crop of junior bankers on Wall Street actually who have no real memory of this. It's just something that they've probably been taught in classrooms, and so it'll be interesting to kind of see how the industry digests this day and this moment in the future as we get further and further away, and fewer people were actually, there in the city that day.
And do we have any sense of how some of the firms affected, some of the adults profiled in this story, plan to commemorate the 20th year anniversary, which is tomorrow?
I think a lot of folks just talked about, processing and grief and remembering. The city has so many events going on, and I think it'll be interesting to see if anybody makes it out there. But for the most part, I think this is just a time of memory and hopefully happy ones. But I think in a lot of cases, to your point, Tim, it's just being told stories of your parents. Because for most of these folks we talked to, they were 2, 3 at the time.
Yeah, we just spoke to the executive director and CEO of the 9/11 Memorial and Museum, and she told us that it was just mind-blowing, the millions of people who are alive now, Jenny, who didn't live during September 11th. So even though it's a memory that for many of us and for many of our listeners, we remember like it was yesterday, there are so many people who don't. I wonder, just lastly in the last minute that we have with you, just about how Wall Street physically has changed since then, because a lot of these people you profile perhaps aren't even working on Wall Street per se.
Yeah, I would definitely say that Wall Street is now more of a figure of speech, I guess. Yeah. It's not an actual place anymore. And, physically, a lot of these banks, because of 9/11, set up entire redundancy sites outside of the city, knowing that they always have to have a backup plan. And we actually saw those get put into place or put into use last year during the pandemic. So it's interesting how so many of the things that banks did in response to this tragedy have actually come into the fore again in the past years as this country deals with another tragedy. It all is really coming full circle for folks.
Jenny Serrain, a finance reporter at Bloomberg News. Please check out this story on the Bloomberg Terminal and at Bloomberg.com. Generation 9/11 following parents they lost onto Wall Street. Thanks, Jenny. Let's head now to Washington, D.C. for a quick update from Joe Matthew, the host of Sound On. Joe, what can we expect on the show today?
Tim, we're going to be talking a lot about this anniversary, and we're going to start off with Congressman John Katko. He's the ranking member on the House Homeland Security Committee as we look back, but also ahead to the evolving threats against the U.S.
All right, Sound On at 5 p.m. Wall Street time. This is Bloomberg.